Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, November 2nd, 2023. So anybody that was doubting the predictive analytics model here and was shorting this market, you are learning the hard way that you know it was not going to take much to spark this rally. And I've been saying that, and I was warning anybody, because a lot of our traders, they do trade on their own. They follow us for market direction, and sometimes they don't agree with us. That's fine. But the thing is that the writing was on the wall on this one, and it was lined up. And a lot of people that were extremely bearish down here, which was pretty much everybody, are now starting to get bullish. And they're actually getting bullish for the exact wrong reason. Again, they're not. I've said this before, and I'll say it again. There's probably, I don't have the exact number, but I'm going to guess it's over 60% of, say, money managers or hedge fund managers or anything like that have the only market they know is one that the Fed is controlling. So right now, everybody's getting all bullish on the market because they think the Fed's going to start lowering rates at the next meeting, and it's not going to happen. The interest rates they're moving up on their own. That's why the Fed has not had to raise rates. So it's one of the things where let them get all bulled up, and then it's going to be the same thing. We're going to see them take the rug out, and everybody's going to fall down. But right now, when we were down here, everybody fell down, and that's why we started getting long this market. And it's not time to get short. That's the thing right now. Even though we're getting high bullish sentiment readings, this was off of the low. And again, the reason why everybody is extremely bullish on this market is because of the Fed, and that's really the problem with this is if we were going up and we just had average, people are a little skeptical, that would be good. But here we have the 98% bullish, and I'm not ruling out that we're going to head up to the 4,400. I think we're going to take some breaks, and really what would happen is we'd have a push down somewhere into the 4280, possibly even down to the 4245, and then come up to the 4,400, 4386. Remember, we still have this open gap here, but we're going to be patient with it. It's I mentioned in the report that there's there may be an opportunity for a quick short trade, and it's I'm doing what I've been doing because it's been working fantastic for 2 years, and taking 100, 200 points on the S&P and stepping aside and waiting for the dust to settle, and then waiting for the next trade setup. And there's not a lot of patience out there right now. It's either the bulls want the new bull market to start, and the bears want the new bear market to start. And what's happening is we're just ending up right where we right where we were. So they can make those battles. One of them's going to be right. I can really care less. Or maybe none of them are going to be right, and we're just going to have these big, massive moves up and down. So my point is this: is that even though we have the extreme bullish sentiment readings, and we're probably going to have it even higher, 100% or 99%. It doesn't mean that we're going to head straight down. It will probably give us a nice little pullback. But right here, when you get your bullish sentiment at the lows here, that's usually an extension. So it's not a cut and dry, indicator, meaning that once everybody's extremely bullish, you got to get bearish. No, you got to let everything line up, and that's the beauty of our predictive analytics model. There's three different prongs to it: time, sentiment, and technicals. So time-wise is neutral because it got not bearish, the market, on 10-10. So there is no target as far as when this ends. So time part is kind of eliminated from it. So now we go by sentiment and we go by technicals. And right now, you can see we have these bullish sentiment readings, but we don't have any sell signals. So what you have to do is try to figure out how these sell signals will generate. And really, the way that they're going to generate is either we're going to hit our head. This is crazy because there's so many different types of patterns that are here. So here is we could come up here and it could take some time to build this is your I pointed out another inverted head and shoulders, the same one that I was pointing out down here, and this is a much larger one where this is the left shoulder. We kind of pop around, come up, make our top somewhere in this area. It doesn't have to be at this top. It could be down here, and it would just mean that the neckline is going down. But in any case, we come down and now we make the right shoulder, and from there, here's your head and shoulders pattern, and this would be. If it played out, it would be devastating to the bears because one is we're looking at close to a 300-point move from where it breaks. So let's just say that we top here, come down, make a shoulder, and the neckline is declining, and we break out of it at the 43.26. The next move is coming all the way. It would be all the way in the 4600 level. So that would be devastating for the bears out there. Again, I don't care if it plays out or not. I'm going to be making trades accordingly to the predictive analytics model. So right now, you can see right here, we ran into, we're trying to punch through this resistance right here. If they do, the next resistance is going to be at the 43.41. That's what I mentioned in the report today, that there's a chance that we're going to get there. Now, I thought we were going to come down and go up to form some divergences, but we went straight up. So this is our resistance area that you want to watch for tomorrow. And we have some jobs numbers coming out, so or economic numbers. So there's a chance that they pop up or that brings us down. But right now, as you can see here, there is no bearish divergences. This is a strong move. Anybody who's shorting it is getting their heads ripped off, and there's going to be a time to short. It's just going to be when we start seeing these extreme bullish sentiment readings, and then when people start looking at oil, and oil is going to keep going up, and then inflation is going to keep going up, everyone's going to run for cover. And seasonality wise, we are it's in the favor of the bulls because, as I said, they like to start the Santa Claus rally early usually. But here's an example of what I'm looking at and these are patterns that I'm not even I don't know how they're going to play out or not. But in any case, this could be the neckline right here. So here you can see your left shoulder. We came down. If let's say we pop up a little bit, or we land right here and we come down because the numbers tomorrow the street doesn't like, and that's where we make the right shoulder. And again, that would be anywhere from the 42.80 down to the 42.50, maybe even a little bit lower, but that's where the right shoulder would be. And then this would be the neckline that you break out of, and again, we'll still be looking at a move coming somewhere up into the 4,500. So you got to be very careful. Right now, I'm expecting a pullback that I'd like to buy the dip, but the thing that I was showing you on the report today, and this is your wave fives that I was pointing out. So here's your one, here's your two. This is an extended, well, you could say 3, 4, 5, but I personally, looking from the 60-minute chart, this is 1, 2, and now we're making the 3, and then we'll come down 4 and 5. And if I'm going to short, it's going to be the wave 5, because that's where you're going to be looking for at least a 50 or 62% retracement of this move, and it will fit in for our 100 or 200 point move on the S&P, and that's what we look to do. So I closed my trade early today. I'm not upset about that at all, that I didn't hold it and make an extra 30 points. Nope. The target zone for me was the 42.75 up to the 4300. We're there. I'm out. Now I just wait for the dust to settle and see if I'm going to be making a move either on the short side or the long side. But the thing is that this volatility is going to be here. We're going to see big moves up and down, and you have to be looking through the fog and be able to see it to know what's going on, because if you're not anticipating the move, you're gonna get stuck just watching it, because it's moving very, very fast right now. So let's just go over some pivot points here. Again, upside, we have resistance right around this the 43.30. Then we have resistance up at the 43.50. If they get above that, then there's a chance we're coming up to this 4,400 level. Now on the support line, you can see right here, right in this area here. I'm going to move this up here actually. And if I move it up, you can see this is your support, right? Anywhere from the 42.60 down to the 42.28. So this is your buy area. It's going to be there. And again, you know me, I go with the wave fives. I do not buy into wave fives, or I do not short into wave fives. So if we come back down, there's a chance that it may be a little scalp trade, but I'm going to get out of that very early, because the next move, we're going to have a bigger move to the downside after this wave five completes. So the support levels are here. The sell, not sell, but the resistance levels. Let's just see what plays out tomorrow. Things have been going very, very, after, we had that massive short squeeze that never ended heading into August. Things got back to normal, and this is it. It's following our predictive analytics model, as well as it's ever been. And even when we were underwater up here, the model was saying to stay short, and it came back down and below where we were. And that's, again, managing a losing trade. I wasn't, I wanted to get out and be like, we made 100 points, and I was out of it. It was a terrible trade on my end, because I like the trades to do like we just did, where we got in on Thursday and out on Wednesday for over 100 points in the S&P. Those are my successful trades. The ones that took 2-3 months, no, they're not. I got caught on the wrong side, but it ended up working out. I expect this to continue to work out. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.